The housing bulls are wrong. Did you guys see the horrible pending home sales in December that were only down, I don't know, 8%? And then the existing home sales that just came out today? What are these housing bulls talking about? The housing market is crashing. It is rumbling lower and lower. Ricky, what's really going on?
Yeah, man, absolutely. So, I don't know. I can't remember the last, like what the report was last time we spoke, or exactly where we spoke. But I've literally predicted this entire thing. And so, if you go back to December, I don't know if we spoke about the December existing home sale, pending home sale report that came out in January, right? So the existing home sale report comes out, and it's amazing, right? It's the best December we've had in 3 years, best month we've had in 3 years. And everything else. And then what we realized in that report is that we hit our 30th consecutive month of positive year-over-year prices, but we also saw a decrease in inventory, 18%.
Yes.
Right. So in 1 month, so think about this. In 1 month, we have a fifth of the homes for sale that we had 30 days ago. So, and if you think about, okay, a fifth of the homes leave the market, probably a percentage of those were just delisted. Sellers just like can't get what they want, take it off the market. The ones that actually sold were the cream of the crop. So you basically got all the, less desirable homes left. So not only was it a fifth less homes, it was like a fifth, like the best fifth.
The wrong product,
right. The fifth best probably left the market, which left that bottom, 4/5 was just like, the buyers were just like, we're not going to settle, number one. And plus it's Christmas, number two. So we're just going to wait for better days. And so, here comes Trump with his 200 billion MBS buyback purchases, which reduced the mortgage spread, reduced mortgage rates, got it under 6% for a split second. The market goes bonkers. There was like 1.5 weeks where the market went bonkers. We're getting multiple offers higher than asking price. Agents are messaging me left and right saying, oh my gosh. And then the market kind of died down because rates got up into the 6.2 range. And so it kind of plateaued, which I totally expected. I totally expected that to be this like 1 week rush. And then it kind of died down a little until our spring rush. And then after our spring rush, I think we're going to have another little jump when the summertime hits. And we're going to kind of get into this better, like normal yearly flow of the market, this year. Not back to, where we actually need to be, but, at least the trend lines are going to show that normal flow of activity throughout the year, unlike we've seen. Okay, so when those, so then the next week, so we see decrease of 7 to 18%. We see prices increase 0.4%. We saw existing homes were, off the chart. So then here comes the pending home sales report in January for December, right? And what we see is exactly what we should have seen, knowing that we have 1/5 less homes to look at in the worst month of the year for activity in terms of buying homes. Do you understand that like a lot of these housing analytical companies, they don't even look at December numbers? Like they just kind of ignore,
throw them away.
They just literally ignore like the last couple weeks of the year, the first 2 weeks of the year, because it's just like it's too much stuff going on. It's really not enough. It's not concrete enough to really say, okay, this is a trend, or this is this is something we need to really pay attention to or worry about. So I didn't even pay attention to it. But I didn't think about this when the pending home sales report came out for December. It was, it was down like 8%, right? It was actually like 9.5%. It was down month over month. And I should have realized that was going to happen based on the fact that we had 18% less inventory to choose from for buyers in the worst month of the year to buy homes. So I should have saw.
Oh, you're back.
We back?
We lost you. Yeah, we lost you for a sec. Go ahead.
I said, okay, this is going to be easy for January. Okay. The existing home sale report for January is going to be bad. It's going to be down around 9%, right? Because the December pending home sales were down around 9%. So like pending home sales turns into existing home sales. So what do we see? We saw, am I speaking too high level here? Like pending home sales turns into existing home sales.
Exactly.
So we were down at 9.5% in December for pending home sales. So obviously we're going to be down like 8 or 9% in January for existing home sales, right? It doesn't take a rocket science to realize that was going to happen. It doesn't take a rocket science to realize that the pending home sales report that's going to come out next week is going to be on fire. And not to mention
that is the point. That's the point right there. Because again, I think you're bringing up things that I'll slow down for the audience, because you talked at 100 miles an hour. We are one of the things that you'll say about 2026 is the housing market in general will move back to its seasonal pattern. We will have a spring selling season. The summer will be slower, right? The winter month that we just left, yes, December is always crappy. We've had a unusual seasonal pattern for 4 years. And now we're seeing it go back. The other thing that we've both talked about is 2026 will just flat out be better than 2025. And to that point, it starts next week with pending home sales, which will be for January.
Yeah.
And that little whisper of, 599 that we saw.
Yeah.
That's where we're going. The market is healing itself is what's going on.
Yeah, absolutely. You're going to have ebbs and flows. I mean, even in 2021, if you look at a chart of home prices in 2021, they don't just shoot straight up.
No.
Right? Yeah. They don't just shoot straight up. They actually went up and down a little bit and up and down a little bit and up and down. Imagine that. In the market where we were getting 100,000 more than asking price on every listing, and there was zero inventory, right? Things were selling in literally 1 minute.
Yeah.
You still saw price, like national and even local home prices have this wave, right? These little, highs and lows throughout the year. There's the seasonal turn, which is very interesting to think about, considering that it was just so on fire with 6 million existing home sales.
It didn't feel like that in the moment. You're right. In the moment, it felt like, oh my God, everything, everybody's hair's on fire. Yeah,
exactly. But if you look at a chart, you realize no matter what the market's doing, it's going to do this all year long. So you're going to have these kind of ebbs and flows and everything, especially when you bounce off the bottom. When you're moving into a downturn or coming out of it, you're really going to see those. That's when you see the most volatility. I'll go further. I'll try to slow down from speaking so fast for you.
You're passionate. We love it. It's all good, man. That was not a complaint. It's just sometimes we got to slow down.
when NAR tracks all this stuff on a 30-day basis, right? It's monthly data.
Yeah.
And so monthly data can look very volatile compared to weekly data. I love Redfin's, the data they have more, they have a 1 to 2 week window of data that they pay attention to. Housing Wire tracks it every week. And you see less volatility in that weekly data than you do the NAR data that comes out where it's like these big swings, we're down 9%, we're up, but if you look at it on a week to week basis, it's not as volatile. But, we know for a fact, like I'm boots on the ground. I talk to agents all day, every day. My DMs could literally be the tracker of the market. Like I
bet.
Like if it's bad, like agents are messaging me. If it's great, if they're this, if it's that, agents are messaging me and letting me know kind of what's going on their home front. But we're going to have a great, like we had a really bad existing home sale report for January. Like who didn't see that coming with the pending home sales, and who didn't see the pending home sales with the 18% drop in inventory? Like it's a chain reaction.
It's all tied together. Yeah. I agree.
And that's why real estate's so fun for me. And that's why it's so comical for me, speaking to, some of these guys, because the cycles move so slow. They are extremely predictable when you understand how these cycles work, and the data is so lag. I mean, we're talking about January, and here we are mid-February. You talk about what's the report that comes out 3 months later?
Zillow, the price.
Case-Shiller, the
Case-Shiller,
report. Case-Shiller report. Like, dude, they came out. They just came out with their
November. Yeah,
they came out with their November report, and that's the headlines. Like, prices are this, and it's like, that was 3 months ago. The market,
where you been? Yeah, the market's different. Yeah. The other thing that I think is interesting, again, talking about 2026 moving into a seasonal pattern, is we saw record relistings. Again, one of the reasons December was so bad was because of 18% delisted. We have already seen, and this data is a week old, so it's probably higher by now. We've already seen 75,000 homes relisted. You throw that into the mix with a month where we had rates for a minute below 6%. And, all my mortgage friends are telling me about just businesses off the charts. They had their record Januaries and all of these things. I'm like, ooh, pending home sales that we get next week. I'm willing to put $1,000 right now is going to be a big number.
Yeah, just because there's more inventory to choose from.
Exactly. It's yeah, like you talk about, the puzzle pieces are not that hard to put together if you've been watching it for a while. There's leading and lagging indicators, more inventory, more choices, lower rates, more buyers. It's just like, guys, come on. It doesn't take a rocket science to figure this stuff out.
You just have to do this one. Here's the secret. You just have to read.
Reading is a good thing.
Yeah, reading. So that brings up an interesting thing. We were down 18% from November to December, and we were only down 0.8% from December to January.
Yeah.
And we're at 3.7 months of supply of unsold inventory in the country, which is up from 3.5 months in December. Okay. And 1 year ago, like it was 3.5 months in December, which is identical to a year ago. So, like a balanced market, people say a balanced market is somewhere between like 4 and 5 months of inventory. Like we're still in, like under the definition, we're still in this seller's market right this second, and inventory isn't shooting through the roof. A couple other key stats in the report was that 31% of the sales were first-time home buyers, which was up. Which was up from 29% in December, 28% from a year ago. And so that's a good thing.
That's good. That's absolutely a good thing. That number needs to be 40%. That needs to get back to 40.
It does. But 31 is an improvement, and then 2% of sales.
Yeah, absolutely.
What's that?
Yeah. I said absolutely. I mean, I will welcome a slow march back to 40. Absolutely.
Yeah. Oh no. And 2% of sales were distressed, which was actually down.
The Crash Bros keep telling me it's coming, Ricky. It's coming.
Which was actually down from 3%. Okay, down from 3%. So the distressed sales are decreasing. Okay, they're decreasing. So
it's mind-boggling that somebody thinks we have a 38% housing crash coming. And oh, by the way, the other thing that I read in the report, prices up. We had 18% of whatever it is collapse in transactions. Price is still up. Again, these people that think transaction crash equals price crash need to read more, to your point.
So I didn't make that point. December was a 30th month. January was officially the 31st month.
Yes.
31st consecutive month of year-over-year positive home prices. They were up 0.9%. So the month before it was 0.4%. So not a huge, but nevertheless, like people are like, oh,
up is up.
0.4%. Oh, wow, Ricky, it's really blowing up over there. Well, but it's positive, right?
Yeah.
Where's the crash? And mind you, there are markets that are down 8%, right? 10%, 12%, 15%, Cape Coral. There's Hawaii. There's places in Texas. There's a few.
You know what's real funny? I watch this stuff a lot, especially the markets that the Crash Bros jump on, like Austin, Texas, a couple years, and Cape Coral now. These markets are already healing itself. Austin, Texas is up year on year, right? It's down from the peak, if you will. But again, folks, that's not how real estate works. We talk year on year. Austin's healing itself already. Cape Coral will
probably 8 to 10 months ago, there's a reel that you could scroll back on my Instagram, and I said these markets, Austin, I named them Austin, Cape Coral, I named all these markets. I named like 5 markets, and I said, have you guys noticed that these markets that have been crushed, like the worst ones in terms of prices, that were the biggest, there were the biggest rushes when it comes to the COVID migration and everything, that have been hurt the most price wise, that they've come down, but they're not going down anymore. Have you guys realized that they're down, but they're not coming down anymore? They've plateaued. They've
bottomed
out.
Is in. Yeah, exactly.
Yeah. And this is 8 or 10 months ago when I said, now it may stay right here. It may, fluctuate a little bit, but this is it. Like it's not going down anymore, ladies and gentlemen.
Yeah. It's so interesting because, again, real estate, unlike the stock market, unlike other things that move very, very quickly, it does move slowly, to your point earlier. And there are so many indicators, right? It's inventory, it's interest rates, it's qualified buyers, right? The lower rates go mean more qualified buyers, the more inventory, more options. And it's just a puzzle that if you even pay half a second and you read, you can play this out. It's not that hard.
What's cool about the future and the rest of 2026, I believe, is the mortgage spreads.
Yes, good point.
Has really, has really, with a little bit of the volatility that we had. I mean, we had the jobs report yesterday. We saw uptick in the 10-year Treasury, which normally affects mortgage rates, but didn't really affect it much.
Yep.
I think it affected like the 10-year Treasury jumped like 8 basis points, and the mortgage rate only jumped like 2 or 3 basis points.
Correct.
Now it's back down like 2 basis points or so today. The mortgage rate is, of course, the 10-year Treasury is down like 5 or so basis points right now as we speak. But even with the volatility, with a lot of the stuff that's been happening politically, there hasn't been much volatility with mortgage rates, and that's because of the spreads. And I think that 200 billion MBS purchase kind of really gave us a lot of cushion when it comes to that, and want to continue to give us cushion moving forward, because now you got more people that have 6% rates than we do 3% rates.
That's true.
The risk behind the reason the spreads were so high is because the investors wanted to get a return on their investment as quickly as possible, because they knew people were going to refinance when rates came back down. But now we're in this boat where interest rates are kind of getting to the point where people aren't really there's going to be refinancing, but not, we're going to get back to a normal rate of refinancing, not an exorbitant rate of refinancing like we're probably experiencing right now. Every time we see mortgage rates come down, we see this jump in the refinancing application data. That's because there's a lot of people out there with 6% rates. I mean, like, 7% and that want to refinance into those 4s and 5s, wherever they can find those. And so we're still kind of in that zone, but that was, again, when they were getting a 3% jump over the 10-year Treasury on their investment to buy those mortgages. Now we're in this position where they don't feel as much future risk of people refinancing so quickly and buying themselves out of those loans, that they're willing to get a 2%, really less than 2%, premium on top of the 10-year Treasury. So I think that's here to stay. I think that gives us a really great, healthy backdrop and outlook for the rest of the year that plays right into our, hey, you and I's, outlook on the market in terms of transactions, which, I'm looking at a 5 to 10% increase in transactions this year.
I'll go 10%. Yeah, I'll go 4.4. We're going to post 4.4 existing home sales. I was originally at 8%. Based on what I see coming, it's going to 10, maybe even 11%. It's going up this year.
Yeah. I'd love to see it. I'd love to see it. So only time will tell.
Well, I got one last question before we let you go, Ricky. Again, as somebody that's been in this for so long, I want to know your opinion. When I say the spring selling season, bookend that for me. When does it kind of start in your mind, and when does it finish? When is the spring selling season in Ricky's opinion?
That's a good question. I'm glad you asked it. So it varies year to year. That's what's interesting. So there, in my opinion, and now I'm speaking in micro markets. Okay, depending on your market, right? And that's really what you should speak on when you think about the spring rush. The spring rush, I sold for 20 years as an agent. So I saw this over and over and over again. I'd always prepare for the spring rush, and it always hit when I didn't think it was when I didn't realize it was going to hit. So it was always either it was always a 2-week period. And it was always either sometimes it would start like that very last few days of February.
Okay.
Right. And it go for 2 weeks. Sometimes it was like the first 2 weeks of March. Sometimes it was the middle 2 weeks of March. Sometimes it was the last 2 weeks of March. Sometimes it was the last week of March and the first week of April. So somewhere between that last week of February and that first week of April. And it's a 2-week period, and you don't know when it's going to hit. You don't know. So you have to prepare like it's going to hit that last week of February, so like for agents, you go out and you stack as many listings as you can before that last week of February. And if it doesn't hit, that's okay. Like, just stay tuned. We'll be with you momentarily. It's going to hit. It's going to hit. Keep stacking. But yeah, it's a 2-week period, somewhere between the end of February and the beginning of April. And so we'll see what that looks like this year. It'll be interesting seeing how this is our first year back with the spring rush.
Yeah, I agree. Last year was a dud. I do think it's coming back. I think it's going to come back on steroids. That's my opinion. But again, you're in the mix. Ricky, where can people find you?
Ricky Carruth everywhere. Just Google me, baby.
Google me, baby. All I do is win. I love that. Thanks, Ricky. Take care.
Yes, sir.